Hey, Arturo. Okay, so you can hear me? Everybody can hear me? Very good. Hey, Tim. All right. So we're looking at the chart of the S&P 500 E-mini futures. You guys see my chart? Okay, these are the overnight lows. Last night, I told everyone in the discussion group that the natural flow for the session was sideways to higher. I said if price trades below 3206, and that's in the discussion group if you missed it. Last night I said if we trade below 3206, then the sentiment for the session swings, the pendulum swings the other way. And we would be looking at a sideways to lower session. Probably the most important thing I can tell you this morning. Now, I want this to be a Q&A session. So if you have any questions about anything, you should speak. And I want to get this week's zones on the chart. So we'll start out working to do that as you guys formulate some questions. When you come in the morning and you look at the chart, price is below the BBC, then you know you're only thinking long trades. Just like over here. When you're above the BBC, you're only thinking long. Below, you're only thinking short. Below the BBC, you're looking for short trades. Above, you're looking for long. So 25, 26, that's a this week zone. Below that, we got 67, 68, which is way down here. There's 67. $31, 68. We'll walk through each one of the markets as we go from market to market. You might want to make notes, especially of the numbers that I give you. Now, you see this bullish cross right here? Okay. From this bullish cross to that swing low. That's also one of the most important things that I can teach you this morning. Okay. All right. So we have an opportunity coming up here. 31.89 to a 31.86. See if I can get that out as an alert real quick. Those who aren't able to be in here. Number 3993, ESM 20. So 31. Let's make it 31.88 just to be safe. 31.88. Target 31.86. And then possible support at 31.84. Possible support 31.84. And then the weekly trading zone below, WTZ 31.67 / 31.68. And out goes the alert. Okay. Put it in this other channel. All right. Everybody understand? We had a bearish cross. Price got below the BBC. Price traded through the number I gave you last night, 3206. So that tells you we're looking for short trades for this session. Price comes down to where the bullish cross happened that led us up to this zone. Now, as we're coming down, right there where the bullish cross took place, boom, that turns into support for the market. So now what has to happen? Price has to come down. Price has to take out these swing lows, and then the alert that I just put out to be short 31.88. Okay, look left. There's nothing in our way. Down to 31.86. Nothing in our way. Potential support 31.84. And then if we can get through this area, then there's nothing in our way to drop all the way to the weekly trading zone. Any questions at all, guys? All right. Show you what this looks like on a daily chart. It's the area we talked about in depth yesterday on the radio show. We talked about this area being a difficult area for the market to get through. Why is that an important area? This low lines up with this high and becomes this resistance. I said last night, if we can get through this area, we have one more daily chart resistance area overhead where the bearish cross took place. But from the looks of today's candle, that's not going to happen. Now, if we take out the low of yesterday's candle, 31.83, that should be a really important number for you. Let's go back to the 30-minute chart. 31.83. This area that we just have highlighted here. This was yesterday's low. So on the daily chart, if we take out the low of yesterday, then it's safe to say that we're on our way down. And where is down? Well, the first down would be getting below blue and climbing, getting below the step line, and then it's just a drop from, we'll call it 31.47 down to 30.62. So about an 80-point drop, but it hasn't happened yet. First, we got to take out the low of yesterday, which on the 30-minute chart is this shaded area right here. The market didn't get all the way last night because it ran into support at the price where the bullish cross took place. The price is just sitting there. Okay. So Bobby asked a question. Based on that analysis on price, do we not need to consider the slingshot? Okay, indicators are a shadow of price. So after the market has fallen this far, I didn't have to look to see that the cycle was red and below the 50-yard line. For me, that's instinctual because we've, just been at this for so very long. But I'm glad you asked that question, and I'm glad you asked it so that I could show you that, yes, the slingshot does support lower prices. Slingshot can't get any more bearish than that. It's red below the 50. When I'm analyzing a 30-minute chart, I put more emphasis on where the cycle is in the slingshot, put more importance on that than I do the color. On a short trade, I would prefer that it be red and below, but you can see over here, the slingshot is not my go-to tool for analyzing a 30-minute chart. But when you can see that it clearly supports your analysis, I guess you could consider it comforting. Does that answer the question, Bobby? To me, placement above or below is more important than the color. Of course, on a long trade, if it's blue and climbing, that's better than red and above. But quite often what you'll see is you'll be blue, you'll turn red, you'll start heading towards the 50, and then you'll hook back up and turn blue again. So placement above color. That's the best way to remember it. Placement above color. Okay. Hey, Jimmy, are you in here? Because you sent me a message this morning about how to do a screenshot. I don't know if you're in here right now, but if you are, just say you are, and I'll show you. Is there anybody here that doesn't know how to take a screenshot? I show this on the radio pretty regular of late, but I know not everybody gets to make it to the daily show. If there's anyone that doesn't know how to do a screenshot using the snipping tool, the snipping tool, if I've got Windows running, the snipping tool is resting down on my taskbar. Just go New, hold down the left mouse button, drag it across, release the left mouse button. Now you have an image. Right click. You can either send it to an email address, copy it to your clipboard, or you can save it as an image file. But like if you wanted to send it to me in Telegram and go, hey, is this a good setup, or any other question, you would just copy to the clipboard. And then you go to Telegram, like so. Put your cursor down here and paste it, Control V, and then send. You can just also right click your mouse, paste. Okay. All right. So that's covered. I'll have Jimmy watch this short video. I am recording this, so for anybody that doesn't make it, they can watch it later. All right. So let's go on to the next market. Now, let me say this. What we've just found here on the ES, we're going to find it on the Dow. We're going to find it on the Russell, find it on the NQ. The indices travel in a pack. There's no one market that leads all the time. If it were that simple, that would be great. You know, the ES takes off, then we all know that we just need to go sell something else. That's not how it works. Now, let me show you gold, because gold on a rampage to the upside. These are not current weekly zones, so let me make them current. This should be 1720. This should be 1719. Come on, baby. 1719. Okay. And then above that's 4748. $17.48, and then below us is 94.95. That one's actually correct. Okay. Now, just as we were bearish on the S&P based upon where the market currently is, bullish on gold. Traditionally, historically, gold and the S&P trade in the opposite direction. So I covered that last night in the discussion group. That one of these apparently has it wrong. Now, of late, with all the crazy market conditions we've seen, there have been times that we've seen gold and the S&P travel in the same direction. But it's usually very short-lived. What you're seeing right now, gold trying to go higher, S&P trying to go lower. So make sure that candle is still moving. S&P lower, gold higher. So on gold, now if you look left, okay, it's a pretty strong 30-minute bar. But right here at 1730, okay, now that was back on June 4th, which would have been, what, last Thursday? I think so. But can that hold sway over the market today? Yep. All right, so let's go. We want to get, let's go. Alert number 3994. We're going to be looking to buy gold above this swing high. So we'll go 1732. Target 1733. Do we have any potential resistance along the way? 17. We should actually make that 34, 36. 34, 35, 36. Okay. Now, right here, see this low ties into this high. So I'm going to put potential resistance 1739. And then the weekly trading zone overhead, final trade tube target, 1747/1748. Okay, off goes the alert. One second, I gotta wake my daughter up for camp. And I'm back. Okay. All right, so the alert that just went out, number 3994. All right, does anybody have any questions on gold? On the trade that we just put out? Using market structure, weekly trading zones, previous support and resistance. This important swing high, this important swing high. So we're looking to do business right here in this open area. And then if price can overcome the potential resistance that I put in that alert, then we look to glide right up into the weekly trading zone. Any questions? Okay. Let's look at the NQ daily. We've already put in a new all-time historic closing high. Now, do you see how today's candle, the high yesterday was 99.01. The high today is 99.07. If this candle somehow were to close below yesterday's low today, that's what's called a bearish engulfing candle. And a bullish engulfing candle in the proper context, like this, on a daily chart, there's no more powerful bullish signal that you can get from the market. Now, that hasn't happened yet, okay? But it's something to watch for, something to be aware of. I'll say it again. If the NQ daily candle, it's already gone above yesterday's high. Remember last night at the beginning of the session, the sentiment was sideways to higher. But I keyed everything off the S&P. I said if we trade below 32.06, then the sentiment switches, and then it's sideways to lower. So the NQ has already taken out yesterday's high, but now it's printing a red candle. If it can come all the way down and manage to close below yesterday's daily candle, that's called a bearish engulfing candle. That candlestick pattern on any time frame is important. But any message you get from the market, the larger the time frame the message comes on, the more relevant and important it is. Get back to the S&P, okay? All right, this area where the bullish cross took place last night, that's where the market found support. That's what we expect. If price can take out this swing low, we just put out an alert to trade down to this area of potential support. This was yesterday's low. So the daily candle, so if this was yesterday's low, let's look at the S&P daily again. Now the high yesterday on the S&P daily was 32.31 and a quarter. See, we came within one tick of matching yesterday's high. So we won't get a bearish engulfing candle here. But the low yesterday was 31.83 and a quarter. And the low so far today is 31.90. Okay. So is there anyone that doesn't understand why we're looking for short trades on the S&P and ultimately the other index futures? Because the S&P is the ringleader. Wherever the S&P goes, the rest of the crowd's going to go too. Because we've gone sideways for so long, this indicator, which is a shadow of price movement. I know there's people that tell you that they have predictive indicators, okay? Well, that just defies the laws of physics. What the indicators do is they help you to see what price action is already telling you. You could take away these indicators, and if you've been around the charts long enough and you understand price movement, you would be just fine, right? These are visual aids to help you see what's going on. Now, the fact that we've consolidated and gone sideways for 1, 2, 3, 4, 5, 6, 7, 8, 9. This will make 5 hours that we've been going sideways since the sell-off was stopped by this price, this area. Because we went sideways for so long, red and falling is now blue and sideways. Is that an obstacle? It is. And because I've been watching these for so long, I was pretty certain that when we got this new candle, which we just did 6 minutes ago, that this would turn blue. Remember, the indicators are a shadow of price. So now price is going to come down. It's going to need to overcome this obstacle. Is that a big obstacle? Well, it's not as big as obstacle. If this were blue and climbing, it would be a much more difficult obstacle to overcome. But at the moment, it's not. So if price gets on down here, gets the deal over with, then we'll be taking out this area where we found support. We'll trade right into that alert that I just posted for the S&P. And then remember this big area down here, that's yesterday's swing low. 31.83 and a quarter. $31.83 and a quarter. Arturo says I was able to log on, maybe try again on another browser. Somebody having a problem? The login window is not showing on GoToWebinar. Oh, I don't know, Todd. Oh, Todd says he got it. Okay. All right, guys, for those of you that got here late, we've covered the S&P in depth. We're looking for, I told everyone last night, if we trade below 32.06, the sentiment for the session changes from sideways to higher to sideways to lower. We've already made an impressive move to the downside. We left the zone behind at 32.25. We're already down to 31.92. If price can overcome this obstacle, this little blue line, take out these swing lows, our window of opportunity was just published in alert number 3993, which is right there. 88 to 86, possible support at yesterday's low. 84, the weekly trading zone below us, 67, 68. Okay. All right. Let's go to the Dow. Oh, wait a minute. That's the S&P. No, that's the Dow. No, it's the S&P. No, it's the Dow. See how closely those mirror each other? Bullish cross. Boom. Always be aware of these guys. When you, now, not every bullish and bearish cross has the same impact, okay? If the market's chopping around, crossing back and forth, that's not any big deal. But when you get a bullish cross that leads to a rally like this, and that's a big rally, right? You get a bullish cross that leads to a huge rally, or a bearish cross that leads to a huge sell-off. When price comes back to the area, it's going to do this. Did it on the S&P, did it on the Dow. Okay? All right. So let's crunch this up, see what kind of obstacles we got going on. Okay, we obviously have an obstacle here. Okay. So, from 27, 115, yeah, we got plenty of room to put an alert there. Let me get the zone up real quick. 26865. 26865. Yeah, I'm just going to put one line for right now. It's 26865/70. Okay. The zone above that is 27480. 27480. So that's way up here. Price is always trying to get to a weekly trading zone, either the one overhead or the one below. And the way you know, over here, you know price is trying to get to the zone overhead because it's above the BBC. Now, we know it's trying to get to the zone below because it's below the BBC. We understand why this sell-off stopped dead in its tracks, because it got to an important price, important area that provided support. Okay? So, let me get out the alert panel. Alert number 3995. IN number 20. All right, so price has to get through here, get through this swing low. So we'll go about 27,110. 27,110. Target 27090. Okay, and then we would find possible support at this low. So we'll call that 27045. Possible support 27045. Anatomy of an alert. Okay. And then the weekly trading zone. Final trade to target 26865. 26870. Okay. Okay. All right, so we published alerts on S&P, gold, the Dow. Okay, let's move on to the Russell. Not as identical as the S&P and the ES, but the theme is the same. Price is below the BBC. We're looking for lower prices. We understand that. Now, this bullish cross did not have the same effect because the market structure is a little bit different. But if you look left, you'll see that these lows line up to these lows. Price tried to break below it. It couldn't. So it backed up to the BBC to get a running start so that this time perhaps it can overpower it, overcome it, take it out. Okay. All right. So right now would be a perfect short entry for the Russell. From, okay, get below the low of this candle, 1507, down to 1505. But at 1505, I'm not going to send this one as an alert, okay? If you put on a short trade right now, 1507 1505, that's 2 points. That's goal for the day. Russell pays $50 a point, so it'll be $100 per contract. But you have to expect that this is going to be support. If price comes down, you got to expect this to be support. If it gets through this support area, then it's got to deal with this support area. Okay, so let's get zones on the chart. Getting the zones on the chart helps you really frame things up. So 1493/94. And there may not be enough room to run to make this valid, and if so, then we won't publish an alert. We only publish an alert where opportunity exists. 1493, 1494. $93.94, and then above that is 1534/35. So here's 34. Here's 35. Okay, zone, almost to the zone. So window of opportunity. See, my hesitancy in putting this out as an alert, okay? If price goes back to the BVC, consolidates and goes sideways for a little bit, what's going to happen to this? It's going to climb. So by the time price comes back down to trigger 1507, blue and climbing could be above our target at 1505. We would literally need price to reverse right here, right now. Okay. You know what? Now, because you're here, if you saw that alert, you would know to ignore it if this traveled up above 1505. But people who aren't here and weren't able to see this live explanation wouldn't know that. Does that, if that doesn't make sense, please tell me. I'm not posting that alert because the potential for the dynamic of the chart, the market structure, is so likely to change by the time it triggers that it would invalidate the target. I know that just, it sounds like a lot of words, but the concept is very simple. $15.07 to $15.05. Valid opportunity right now if this candle turned around and dropped. But if this candle goes up, because indicators are a shadow of price, this is going to come up. So then if we find resistance at the BVC and we come back down and trigger that 1507, then this thing could be sitting in the middle of this little window of opportunity, representing potential support. So I don't want to put someone into a trade that doesn't have the highest probability of being a potentially profitable trade. Oh, thank you, Todd. Todd said it was a good explanation. He understands. Okay, thank you, Todd. Always good to have some feedback. Okay. So there's a window of opportunity on the Russell, but we're not going to put out an alert right at the moment. Now, I could put an alert out. 1496 to the weekly trading zone at 1494. So I'll do that. So 1496. Target's 1494, and it's also the weekly trading zone. So that's a very simple alert to type. Next, we're going to move on to the NQ. Okay. NQ. Let's get some zones up there before we have a point of reference. 98.91 is a zone. 98.91. Yeah, I'm just going to put one line for right now, but you know it's 91/92. Below that is 97.51. 97.51/52. Okay, I'm just going to put one line for right now. All right. So if price, now the BBC is still holding. You know, the NQ has a tendency to exaggerate to the upside, to the downside, etc. So this, for now, I'm going to call a head fake to the upside. Could it be the first indication that the markets are actually going to turn around and give us a bullish session? Possible, but it's too early to read that into it right now. If I gave you a short alert right here, 98.39, 10 points would be 29. That's right where blue and climbing is right now. So I just can't squeak one in there in good conscience. Okay. So then that leaves us with this. Now, again, bullish cross, support. Bullish cross, support. Why did the market stop there? Why didn't it go all the way down to test the swing low? I mean, that's how support and resistance works, right? Yes. This is what I refer to as hidden support and resistance. You guys see this because I've taught it to you. Majority of traders in the world don't see that and really aren't quite sure why this sucker turned back up. Okay. So welcome to the club. Okay. So we got to get below the low of this guy. And because of this and this and this whole area, I've highlighted this area here. So we've got to work within this area right here. Let's go 98.08. I will give it a little more room than that. Go to 98.05. This will be alert number 3997. 3,997 alerts. 3,000. I can't believe I've stood here at this keyboard. Okay, we just got an alert. Price is pulling back to the BBC on the S&P 5-minute. I hear the little thing ringing in my headset. 3997 NQM 20. And that should be ringing up on the 5-minute. I'm still fine-tuning all that. So here's the S&P 5-minute. Okay, see what happened? Price pulled back to the BBC. So those of you that are on that beta test for those alerts, it's just notifying you that on your 5-minute, we just pull back to the BBC. Okay. All right. So focus on the NQ. All right, we want to be short. We got to pass on that. Now, live in real time, you can trade this opportunity. You don't need an alert from me. When price takes out the low of these two candles right here, right where I've drawn this line, when price takes out the low of those two candles, it gets just below it. You've got a window of opportunity from 98.38 down to 98.28. But when price runs into blue and climbing, it could potentially be good support. This is an alert I gave out on the radio show yesterday, which was this, and this was price filling the window of opportunity. Price was here. Price was about here during the radio show, about 1:30 yesterday. My time. Or no, Eastern, I'm sorry, 1:30 Eastern. And price just went right up, did the deal, got to the zone. We expect the zone to be good resistance until it isn't. It was. Now it's trying to come back to the zone below. All right. So we want to be sellers at 98.05. Target 97.95. 97.95. Okay, and then this trade has potential support at 97.90. Potential support 97.90. And then a weekly trading zone at 97.51 slash 97.52. Okay, we're almost out of time, so we're going to jump to crude real quick. Let me get this alert sent to the other channel. We've already covered gold. We've covered gold, the S&P, the Dow, the Russell, the NQ. All we have left is crude. Okay? Okay. Crude came down, found support where I had highlighted it and discussed it with some folks last night. Okay, we're climbing, leg, retrace, leg, retrace, leg, retrace. First indication that things were done to the upside for the moment was this bearish cross. Okay? Higher highs, higher lows. And then all of a sudden, see, in keeping with the theme, leg, retrace, this leg would have gone on to put on a higher high. But it didn't. Got stopped in its tracks. This confirms. Boom. Okay. All right. So, get zones on the chart real quick. Let's see. 38.55 is a zone for this week. 38.55. I'll just put one line for right now, but it's 38.55/60. Next one below is 37.55/60. Okay. So we're right between zones. Price tried to break below the zone last night. It actually got below it a wee bit. But an area that I had highlighted from back here as being potential support, as you can see from that little rectangle, that held. So in order to trade crude, of course, because price is below the BBC, we have to think short trade until price gets above the BBC. Okay. I know that Michael does not go reference the larger time frame in the morning on the range chart. His goal is simply to teach you the setup. Bullish cross, price pulls away, price pulls back, up close, get long. Bearish cross, price pulls away, price pulls back, down close, get short. That's all he's trying to teach you. Okay. If you will learn to reference your higher time frame and then trade your range chart in the direction that puts the wind at your back, you'll see a dramatic change in the results that you get from your 4-tick range trades. Okay. All right. So below 37.55, we got $36/36.05. So that's going to be the area that we're going to look for if the market continues down. 36/36.05. Okay. So we want to get below this area here and this area here. See how that low lines up with that low? Yeah? Okay. All right. So we're going to look to be short 36.90. Number 39.98. GCLN 20. Sell. Yes, 36.90. Initial target 36.80. Okay. And then possible support 36.60. And then the weekly trading zone below 35, I'm sorry, 36/3605. Okay, the alert is out. All right, well, we've managed to accomplish today. We've talked about the structure of the market. We were able to publish some alerts during the session. We published an alert on the S&P based on market structure, on crude, on the Dow, on the Russell, on the NQ, and crude. We covered all the markets this morning. Does anybody have any questions about any of that? We talked about our daily chart, what that looks like. Okay. On the S&P, if price takes out yesterday's swing low, which is going to tie into that alert that we published, then the next step would be for price to close below the step line. And once we close below that step line, the trip to the BBC could be brisk. Not forecasting a sell-off or a crash or any of that stuff. So the little 5-minute bell just went off again. Oh, this is beautiful. Okay, I was trying to explain to you what a bearish engulfing candle looks like. Okay, do you see how this candle it extends above the high of the previous candle and it extends below the low of the previous candle? That's as bearish as it gets. Now, the context isn't that great. What do I mean by context? Let's say we had a bigger up move, like a leg, a retracement, and then another leg up, and then we got this bearish engulfing. That context would be better because you see, we're actually putting legs to the downside here. Leg, retrace, leg. And look where price ran into support. Well, it just fixed that. This is a huge bearish engulfing candle. Let's see what it looks like on the 30-minute. Oh, tell me my charts didn't just freeze. Say it ain't so, Joe. Okay. Markets just opened. So Michael should be here momentarily. Oh, come on, baby. I think all the volume that just hit the market. And Kramer, there's Kramer. Dow tumbles following 6-day rally. He's so cute. Well, guys, let's hope Michael shows up because I think my chart's just locked on me. Oh, you nasty boy. I got to get an i9 chip. I just do. Okay, over here. Now, we just saw it on the 5-minute. Now we're looking at it on the 30-minute. Blue and climbing is an obstacle to a short trade. We understand why these lows were put in overnight. Okay, matches up with the bullish crossing price, right? That led to the big up rally. Support on the way down. And so the alert that we put out, we need to get below blue and climbing. We need to take out these swing lows. And then our window is right here. And then we've got potential support at yesterday's low. Every day when you sit down and look at the markets, go to your daily chart, identify the previous day's high and the previous day's low, because those will be obstacles. Ty just got his 2 points on the Russell. Ding! I cleaned my office so that the computer guy could come and heal my computer Sunday. That's where I had church Sunday, up on the flight deck praying over my computer. So I was trying to clean up. I hid my bell from myself. Oh, dear. Congratulations, Todd. You got the human ding. All right, guys, any final questions? I'm sure Michael will be here any second. So we still got time for questions because he's not here yet. Now, I see price moving, so my charts are keeping up with price and volume at the moment. Okay. So I gave you a number last night on the S&P in the discussion group. This is part of the importance of hanging out or being aware of what's being talked about in the discussion group. I told everybody if price gets below 3206, we go from a bullish session to a bearish session, sentiment wise. And so when we took out 3206, in the absence of any alert, you should have been able to get short, trade that thing down to where you ran into potential support. Okay. Remember, the whole goal of what we do is so that you ultimately don't need me. You don't need Michael. I mean, you still love us and you want to hang out with us, but you're not dependent upon us to give you trades on any given day, right? You come, you look at a chart. If there's a trade setup as we've defined it, as we've taught it to you, you trade it. If it's not there, you wait. And sometimes that's the most difficult, because if the market, see, like I'm sure many people right now see some kind of trade opportunity. I don't mean you guys, I just mean the world in general. People see some kind of trade setup right here. And I'm sure that based on different strategies and methodologies, there is a valid trade setup here. Based on how we view the markets and how we use market structure and our weekly trading zones and our positioning with the BBC and all these other things, we're seeing it a little bit different. But you don't want to get too far away from how see, in the beginning, I thought that I needed to learn all these secrets. You know, I needed to uncover the secret. And after a year of that, I realized that no, what I need to see is I need to see what the most people are seeing. Because whatever the most people see, based on technical analysis 101, that's what most people are going to do. So if I can look at a chart and know that everybody watching a 5-minute chart is probably going to go long here or go short here, I can preempt that. I can go short a couple ticks ahead or short a couple ticks ahead. And so as the masses come piling in to that long trade or that short trade, them coming in just scoots me whoosh, right to my target. Whoosh. That's trademark. Okay. All right, enough fun and games. I'm worried about Michael. Oh, there he is.
I'm here.
Okay.
I'm here.
All right, brother. It's all yours. Take it away, guys. I enjoyed it. Thank you for your questions.
Thank you.
Watch those alerts. You know what to look for in today's session. Now, just like I told you last night, getting you below 3206 would create a bearish session. If somehow during this opening 30 minutes we get above 32, we get above this zone overhead, 3225, then we're back to a bullish sentiment. All right, guys. Thanks so much. You've been great. Don't forget to tip your server.
to be had. Okay, hang on. I'm going to bring it over to me.